Hey guys, hopefully you guys have got some studying in and you've had a good weekend. Just wanted to do a trade review of my SPY trades on Friday, and I wanted to kind of walk through um, the trades a little bit slower just to help you get a better understanding of what I actually look for in my setups. So let's uh, let's get into it. Essentially, like I said, I've got an ABCD, or I mean, sorry, an ABC setup when I trade. A's got to happen first, B's got to happen next, then C has to happen, then that's when I take the trade. Um, Now, there can be at times some other factors that go into it that strengthen the trade, but essentially, I look for three things when I'm trading. So here they are. So I'm gonna give you guys my secret sauce on how I'm getting in and out of my trades here. So the first trade I took was a put in the SPY at approximately 9:05. So you can see here, I got in the trade here and then exited the trade here, and this was about a 9% gain. So this is what I look for. So first one is A. So A is here. So I'm looking at the STO. When that red line crosses the purple line for the VIX, because I'm looking, these are all 5-minute charts. So when the red line's crossing that purple line for the VIX, obviously that means that the VIX is strengthening. So therefore, the market should be weakening. Because for those of you that don't know, VIX is inverse of the market. So when the VIX is strong, the market should be weak. When the VIX is weak, the market should be strong. So essentially, this is what I started looking for at the VIX. That means there's momentum in the VIX, right? And that means the momentum is strengthening. So the STO cross is the first thing I'm looking at. Then B is the second thing I'm looking at, is going to be the 9 and 21 EMA cross. So you can see here the 9 crossed. The 9 is the orange line and is crossing the green line, which is the 21. So the 9 EMA crossed the 21 EMA. That's B. And then C is bullish or bearish divergence. So in this case, I want to have bullish divergence on the VIX because I'm essentially looking for the market to sell off a bit. So you can see here, we had to have a relief of selling pressure. So that's C. So now everything's set up on the VIX. So now I'm looking over here, and we can see here with the SPY, A, right? So we got the STO crossing, so A is good. And then we've got B, which is going to be your 9 and 21. So essentially, that 21 has to be crossing the 21, or it's got to be underneath the 21. So you can see it's underneath the 21. So that's B. So that's B, a check for B. And then C, we've got bearish divergence here. So it's set up there, right? So that all looks good for the SPY. And then same thing on the Qs. A here. B is set up because we got the 21 underneath the 9 underneath the 21. And then C set up because we've got bearish divergence. So now, once all that's set up, now I'm looking for a trade. Okay. So that's why I ended up taking the trade. Now, like I said, there's some key factors that add additional, strength to the trade. And you can see here's one of them: the SPY's in a squeeze and the Q's in a squeeze. So that's another key factor, and they're breaking out of the squeeze. So that's definitely another key factor there. And then volume is another one. Volume's above average here on the SPY, and then volume's above average here on the Q. So that means it's probably going to be a bit of a stronger move. And then another key factor is it's under VWAP. This blue dotted line is under VWAP, is VWAP. And if it's under there, right, it's more than likely going to go short. If it's above there, it's more than likely going to go long with the other factors, right? And then the last one I look for, that's an additional benefit, is if we're breaking through a support or resistance line. And so you can see here the gold line is a daily level, and green is weekly levels. So you can see on the SPY we're actually beneath a daily level, and then on the Qs we have broken beneath a weekly level and then breaking down past an intraday level. So once I'd seen that, my entry was here because mainly all three factors had lined up and it had pulled back and then was coming down. So I wanted to enter as it was breaking past that daily line, um, that daily resistance level. So I entered here around 410 and then exited about $1 move down to 409. So that was my first trade. That was about a 5-minute trade for a 9% return. All right, next trade. This is going to be calls for the SPY. This trade was at 10:56, and I exited the trade at 11:04. This is for a 37% return. So once again, we're setting up right on the SPY, or sorry, on the VIX. I want to see weakness. So right here, the Stowe's crossing. So that's A. B, the 9 EMA crossed down right past the 21. So that's B. And then we've got bearish divergence, C. So we're set up there. That looks good. And you can see we had a breakdown of the VIX here. SPY, we've got a cross on the Stowe, that's A. Cross on the 9 and 21 EMA, that's B. And then C, we've got bullish divergence. And so this is the same if you look at the Q chart, same exact setup. Once again, now we've obviously had strength on this move because we had some additional benefits. It was squeezing and breaking out of the squeeze there. And we didn't have above average volume. It was breaking through VWAP, right? And we were above some weekly and some daily levels. So we didn't necessarily have the volume as an additional benefit, but we had us breaking through VWAP here. So my entry was essentially right at that 9 EMA, and then my close was going to be a close below it. So essentially, if a move is strong, it's usually going to hold that 9 EMA at least for a few candles or several candles if you have a strong move. If we would have more volume, we definitely would have a stronger move. But entered here, exited as we broke out. And the reason why I got out of the trade there is because if you were to look back to the left on the chart, there was a lot of noise over here from the previous first half of the day. So this was essentially a resistance level here. So exited the trade there for a 37% return. Third trade. So this is a good trade here. Definitely a good teaching trade. Here, so on this trade, I took a small loss, and I want to break down why. So this trade I entered at 103, and I got it at 104. So it was a minute trade. It looked really good at first, and then as soon as I got in, I realized it wasn't the type of setup I wanted. So in and out. I mean, and it was like I took small size on it just because we were going back and forth. So it was like I think a $2 loss. I mean, it was super small. So we look at the VIX. So we got the VIX crossing up here, and then we came back down here, right? And this is where I had taken a trade at. So we hadn't crossed on the VIX, and then the Qs, or the SPY, which I was expecting to come back down, we had crossed here, and then we had just retraced again. So we had crossed, but we were coming back up. So we were kind of just playing between this daily and weekly line, and you can see here, right there, once we had came back up on the 9, and we weren't essentially crossing down yet, right? We didn't cross down into this next candle. So I was waiting right here, and you can even see here where I took the trade at. We hadn't essentially crossed over until this next candle. So that's why, it was a good play, but essentially it wasn't the greatest setup yet because all the factors from A, B, and C weren't there. We didn't have bearish divergence because we were still squeezing, right? Um, so it was just sitting there squeezing, and then we didn't have the cross, so we just had to wait a little bit longer. So now, boom, my fourth trade came in here. Once we crossed, now we started having everything line up. We crossed up here on the SPY, right? We started moving down here, and then we started moving up on the VIX. Then we got the 9 and 21 EMA cross on the VIX, and then we had the cross on the SPY and the cross down on the Qs, and then we started having bearish divergence. You can see bearish divergence. So now it was an A plus setup for me. My entry was around here about 410. Once again, I wanted to enter here. Wanted that 9 EMA to hold. My exit would have been if we closed back above that 9 EMA. Wanted the 9 EMA to hold. Entered around 410. Exited like around 409.80-ish. So another good dollar move. This was an 83% return in, like I said, about eight minutes or so. So yeah. So that's it. That's my trades for Friday. The main thing is it's just making sure you've got some type of setup, some type of edge in your trading, because if you don't, you're going to suffer the consequences. And if you got any questions or questions or concerns or anything about how I do my setups, please hit your boy up. If the content is good, please like and subscribe. Definitely trying to grow the channel, and we'll go from there. And so with that being said, hopefully you get some good studying in. Hopefully you have a good Sunday today, and good luck trading the rest of the week coming up. So anyways, I'll talk with you guys later.